Hey everyone, so we are all bombarded with information about companies from analysts. They dominate the conference calls each quarter, they influence the stock price, and they write a lot about the popular companies. Research analysts, also called investment analysts or security analysts or equity analysts or sell-side analysts or financial analysts, well, they're financial professionals charged with analyzing the financial stability and potential for growth of publicly traded companies. These research analysts, well, they look into companies' metrics like historical revenue growth and earnings growth. They also dive into macro market conditions. Now, analysts are regarded to have deep knowledge about the company they are issuing buy, hold, or sell ratings for. They are perceived to have a deep knowledge of what the upcoming numbers will look like for revenue, earnings per share, and the share price over the next 12 months. They are supposed to help regular investors with their industry expertise so we can make better investments. Now, let me open up about analysts and why you should think twice before hearing anything an analyst has to say. This is going to be a little bit ruthless because I almost think this entire profession is pointless. Поехали. Now let me start with the facts. A good analyst is trying to alleviate surprises for the upcoming earnings for a company. So this way the market can operate hopefully more efficiently. But in the fourth quarter of 2020, 81% of companies listed on the S&P 500 were reporting a positive earnings per share surprise, meaning that these companies beat analyst expectations. Now in that same quarter of 2020, 79% of companies listed on the S&P 500 beat analyst expectation in terms of revenue. Those are funny statistics that show that highly paid research analysts who are expected to be pretty accurate had up to an 81% failure rate. If your investment advisor admitted to being wrong 81% of the time, would you continue to pay them to manage your investment portfolio? Okay, next is incentives. Think about the daily life of an analyst. They get a salary and have a boss and are not invested in the companies they research. More often than not, these analysts are junior people at a brokerage firm, mutual fund, or a hedge fund. A lot of times straight out of university with their fancy degrees and heads filled up with theory. So a simple change in opinion about a stock, whether it is a buy rating being changed to a sell rating or a hold rating changed to a buy rating, these things do move stock prices. So analysts strangely have a lot of market power. Now, I'm not going to go as far to say that because analysts can move the stock price, then this isn't a tactic used by hedge funds or mutual funds. But let's just say the hedge fund has a big position in a company and the analyst is working for that hedge fund. Well, it might be in the best interest of the hedge fund that their analyst doesn't say too many negative things about the company. Although the analyst is supposed to serve the industry and their customers, well, the person paying them is going to be served first. The incentives are not working in the favor of the average investors like you and me. Now let me talk more about issuing buy ratings, hold ratings, and sell ratings. I have a problem with this. Did you know that 45% of all stocks have an average buy rating, 50% have a hold rating, and only 5% have a sell rating? Are you going to tell me that only 5% of companies are bad investments? That is obviously not the case. Generally what happens is the ratings change based on whatever is happening to the stock price. It's at best a lagging indicator. A downgrade from a buy to a hold from one analyst can be big news, but they only downgraded it because the stock had been declining for a few weeks and now they are not so confident. This isn't investing. This is just emotional, irrational stupidity. For buy and hold investors, this stuff is pointless. So some of them are just kids out of university, applying the theory that they've learned in class. How could we possibly know they have done their homework on a specific company? We have no idea. Maybe they just had a vacation in Paris and think that the world sucks and everyone sucks in it and all businesses suck and life is pointless. I might feel like that after going to Paris. So look, then they come home and they downgrade Alibaba stock from a buy to a hold. What I'm trying to say is that analysts are humans with emotions and biases and all sorts of things happening in their heads. It's hard enough to keep on top of the things happening in my head, let alone relying on information from someone that I have never met, who I have no idea what their mood or incentives are. Sure, some of these analysts might be smart, but we are not checking how smart these analysts are. We all have no idea how thoroughly they understand a company. Now, I don't know about you, but if you've ever listened to conference calls from a company, all the analysts want is guidance. Guidance on the next quarter, guidance on the industry this year. It's all this short-term focused stuff. I hardly ever hear a good question from an analyst on a conference call that is long-term focused. They only care about their articles and their projections. My opinion on it all is just to completely ignore the analysts, but listen to how the management team answer analyst questions. I like it when the management team are super honest, like owning up to a mistake they made, saying they did something wrong, or better yet, when they straight up say, we don't give guidance and the business is dynamic and we will invest in growing the business as we see good opportunities for our capital. Okay, this video admittedly has been critical of stock market analysts. The fact is, professional analysts are human beings who make their best efforts to succeed in their careers, just like you. They're not bad people, but their interests aren't always aligned with yours. So I guess the bottom line is that nobody is going to hold your best interests as highly as you will. As such, you shouldn't trust anyone's opinion more than your own when it comes to your money. Now, if you're someone who's new to investing and you're looking for a brokerage account that is safe and you don't have to worry about, well, Interactive Brokers, in my opinion, is the pick. I only recommend them because I think they're the safest. What's the point in saving $1 or $2 in commissions? If the risk is higher, you could lose it all. But yes, even Interactive Brokers, they have analysts, but I just choose to ignore them. There's a link in the description for those interested in taking a look at a demo account and getting a feel for it yourself. And if there's any indication that this video wasn't a complete waste of my time, that would be greatly appreciated if you could maybe just hit that like button for me. Now, I want to say before I go, a big thank you to Don't Be Evil, who is one of my subscribers. I like the profile name, by the way. You always have great comments. I appreciate the support. You are a legend. Thanks for staying to the end, and I'll see you in the next video.